Here's the catch. Despite the positive signs, the pace of growth in the Eurozone remains frustratingly slow, even as businesses hit their highest activity level in 15 months this August. But here's where it gets controversial. While overall activity is up, the question is whether this sluggishness will last or if it's just a temporary reprieve. Let's break down the numbers and see what this means for the future of Europe's economies. S&P Global's Flash Purchasing Manager Index, PMI, shows that business activity in the Eurozone grew at its fastest rate since May 2024, with the composite PMI reaching 51.1 in August. This suggests a 0.2% quarterly GDP growth, matching expectations after a 0.1% rise in the second quarter. However, the report warns that expansion is still frustratingly sluggish, highlighting the challenge of maintaining momentum in a post-pandemic recovery. The key driver of this growth was new orders, which rose for the first time in 15 months across both manufacturing and services sectors. For manufacturing, the flash PMI finally surpassed 50.0 after a steep downturn post-pandemic, marking its first growth since June 2022. Output climbed to 50.5 in August, up from 49.8 in July. Meanwhile, the services sector saw a slight dip but stayed above 50.7, signaling continued growth. France's economy is showing signs of stabilization with PMIs just below 50 points. This indicates modest GDP growth in the third quarter, though the country's recovery is still fragile. Germany, on the other hand, reported 3 straight months of rising output, but its service sector underperformed, raising questions about the sustainability of this trend. Barclays notes that while the Eurozone as a whole outperformed Germany and France, the services sector lost some momentum in August. On the labor front, employment in the Eurozone rose slightly in August, suggesting a cautiously optimistic outlook. However, the ECB has already cut interest rates 8 times since June 2024, bringing the deposit rate to 2%. While this leaves room for further cuts, a small uptick in services inflation could complicate things. Meanwhile, the UK's economy is telling a different story. The flash PMI for August hit 53.0, its highest for a year, driven by strong services growth. Although manufacturing output fell marginally, it's stabilizing after years of sharp declines. Yet demand remains fragile, with concerns over government policy changes and global uncertainty. Goods exports are still falling, and payroll numbers are being cut, leaving the Bank of England with little room to lower rates this year. So, what does this mean for the future? Is the Eurozone finally on a path to sustainable growth, or is this just a short-term rebound? What does this imply for the ECB's next moves? Share your thoughts below, because the answer isn't just in the numbers, it's in the debate they spark.